It's 10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong. Our top stories today. Bankers prepare to stop taking share orders for ARM's IPO, which is already 10 times oversubscribed. Meanwhile, Apple gears up for a high-stakes iPhone launch. UK jobs data for August showed another record month for wage growth, putting more pressure on the Bank of England to raise rates again. And JP Morgan CEO Jamie Dimon hails U.S. consumer resilience, but he's also taking aim at U.S. regulators, calling for more humility. Welcome to Bloomberg Surveillance. This is the early edition. I'm Danny Berger in London alongside Shanali Basak in New York. Shanali, we've got ZEW, if you're American, Germany survey coming in. Investor expectations for the month of September, better than expected. Still not great. A negative 11.4. The estimate had been a negative 15. We'll get more into that later. Shanali, that's all the data for Europe, but in the U.S., we're still waiting for that all-important CPI tomorrow.
Yeah, we're just about a day away. And when we wait for that CPI data, we are looking at some weakness in the S&P futures on the day today. We're watching at the S&P down about 0.2%, a little more than that. We are watching yields back on the rise ever so slightly ahead of that critical print, as you've been saying, 499 handle on the 2-year. This is a roughly flat, but a tick up from where we started the day yesterday. The Bloomberg Dollar Index partly on the rise as well. Can explain your movement in yields just ever so slightly. A huge story here. Brent crude crashed above 90 last week, now above 91. You are looking at Brent crude up about 0.6% on the day. I told you we'd keep an eye on crude all week. We certainly are. I want to flip up the board because there's a big global story also, Danny, that is in Country Garden. We're looking at shares that have risen in Hong Kong trading after the Chinese property developer, very intimately ingrained in markets in China, but very critical to homeowners. They want approval for creditors to extend repayments on 6 UN bonds by 3 years. Now, remember that news came roughly a week after last-minute repayments of dollar securities, and the most recent developments have driven the Hang Seng Index higher. That index ultimately traded lower on the day. However, it did get a tick up from the initial news. Country Garden has also since pared its gains so slightly, but still up almost 4% on the day.
Yeah, still other deadlines there for Country Garden to worry about that repayment on Thursday. Shanali, I want to get back into the ZEW investor expectation surveys, which I just mentioned. Okay, the good part of it is that expectations, that is what the situation will be going forward, are not good, but better than expected. The estimate was for negative 15. It came in at negative 11.4. However, it is the current conditions of the ZEW that are worrying. The estimate for that was a negative 75. It came in at a negative 79. In other words, those investors surveyed in Germany see their current situation very bad. It will get a little bit better than expected, but still it's the concern here and now in Germany. The euro continues to weaken versus the dollar. It's down by 1/3%, not moving too much off of that survey because it was already down a whole lot. Giving back the gains we had seen yesterday, we're going into the scenario where currencies are moving more off of growth expectations, and those expectations and reality are weak in Europe. The 2-year yield, this is an interesting one, a big rally in gilts. We had some UK jobs data come in. Unemployment ticked higher, so the job market looks softer there. However, we did see wage growth stay at 7.8% year over year. That is another month of a record. Why is the wage story not cracking? And why are we getting a rally in the front end off the back of that? You'd think we would sell off. Perhaps we've now expected that this is the peak in wage growth. Surely it will move down with unemployment. And Shanali, quickly, European stocks, those giving up the gains for the day, they're basically flat to a little bit lower.
Meanwhile, markets are awaiting, as we've been talking about, the latest U.S. inflation print just a day away and the next Fed decision about a week away. In the center of an uncertain future for interest rates, the team over at Bloomberg's podcast Odd Lots asked PIMCO co-founder Bill Gross on whether there's a new bond king in town. His answer was an unapologetic blast at DoubleLine's founder, Jeffrey Gundlach. For more, let's bring in Bloomberg's Valerie Teitel. Valerie, is this the call, a call that the next bond bull market just can't be as big as the last?
Well, in that Odd Lots podcast, Bill Gross did comment that it was the function of the 30-year bull market that did propel him to earn that nickname, the Bond King. But in that statement that he made about Gunlock, he shot back at Gunlock earning that same title, saying to be a Bond King or Queen, you need a kingdom. PIMCO had $2 trillion under management. Double Line has $55 billion. Come on, that's no kingdom. That's like Latvia or Estonia. Quite some shocking remarks from Bill Gross that was made to the Odd Lots podcast at a conference in California. Now, Gunlock does attend the same conference today. Let's see if there's some scathing words he has back for Bill Gross. But Bill Gross, widely known as the Bond King, definitely earned that moniker by taking PIMCO's total return fund to the biggest in the world. And I remember my days being on a trading floor when that PIMCO line rang, you shook in your seat. So it was definitely well earned. That being said, this bad blood between the two arose when Bill Gross left PIMCO and confronted Gunlock on the possibility of working together. And Gross said that Gunlock trashed him for the next 12 months. So perhaps some scathing words from Gunlock due back today. We'll be listening for those, maybe crossing the wires.
Yeah, PIMCO, not exactly the best reputation when it comes to, shall we say, their kindness dealing with bankers. Also, so mean to Estonia and Latvia. Wonderful countries. I would love for that to be my kingdom. Okay, so if Gunlock isn't the Bond King, where does the next generation of Bond royalty come from?
Funny you asked that, Danny, because he did mention that the next generation of Bond Kings and Queens are at the Fed, saying that the Fed is in charge. And we find out tomorrow with that US CPI print if exactly the Fed is in charge of this inflation picture in the US. It has been looking good for the Fed. They've gotten those 2.2% month-on-month core CPI prints. We might get that third one tomorrow. It is looking like the Fed is in charge for now.
Valerie, thank you so much for that. Also, only you, Valerie, could take this in what's kind of a gossipy story and tie it to reality. I love it. Valerie Teitel there from our markets team. All right, after the regional banking turmoil earlier this year, U.S. regulators have proposed higher capital requirements that have been slammed by J.P. Morgan CEO Jamie Dimon. Dimon pointed finger at central banks in an interview at the Barclays conference yesterday.
The Federal Reserve should have a little humility. They're the ones that told the world rates aren't going up. And it wasn't the Federal Reserve in general, it was each one of them independently. In fact, it was each central bank. So if I were them, I'd have a little more humility over stuff like this.
Will Shaw, Bloomberg finance reporter, joins us now on this. Will, this isn't the first time he's lashed out at some banking reforms, saying, you know, private equity will be dancing in the street about them. What exactly are the banking reforms that he is so opposed to, and when are they going to come in?
So bankers complaining about regulation is a bit like sailors complaining about the sea. But obviously, this is Jamie Dimon, so people take it very seriously. So the Federal Reserve and other US regulators have indicated that they want banks to hold billions of dollars more in capital reserves after the collapse of several smaller lenders earlier this year. Now, for the 8 biggest banks, that's the like of Citigroup, JP Morgan, Goldman Sachs, that could mean holding nearly 20% more capital than they do at the current time. Now, the regulators, obviously, they say that will make the banking system safer. The bankers counter that this will make it harder for them to reward investors with share buybacks, which they did to the tune of $137 billion between 2020 and 2022. As to when these reforms will come in, it's likely to be between 2025 and 2028.
Well, let's talk about the biggest of the smaller banks, if you will, because on one hand, you have Citizens saying that they are trying to avoid a fire sale and unloading $9.2 billion worth of securities. And you have Truist starting to embark on job cuts, significant job cuts to try to trim expenses. How much pressure is there still on the regional and kind of mid-sized banking system?
Well, I mean, from those two firms, it looks like quite a grim outlook. At Truist, the CEO, Bill Rogers, said yesterday that the firm's performance was disappointing to investors. And on top of that, it was also disappointing towards him. Now, that's the 3rd biggest regional bank by assets in the US. So it's a significant measure to look at. As for Citizens Financial Group, like you say, they've indicated that they will avoid deals that mean booking losses as they seek to cut a $14 billion portfolio of unwanted loans. So in that particular area, the outlook is not looking great at the moment, even after a bad start early this year.
Bloomberg's Will Shaw, thank you so much for your time. Now, ARM's IPO is planning to price its shares tomorrow, but it's closing its order book a day early because of such high demand. It's oversubscribed by 10 times. Joining us now is Bloomberg MLive editor Eddie Vanderwalt. Eddie, just because it's oversubscribed to this degree, does that mean that its valuation is certain to get a lift on the gates of its trading?
Sonali, there's a lot of maneuvering that I sense below the surface here. On the one hand, right, it is great for any IPO if it's oversubscribed. It's much better than clearly if they don't have demand. But at the same time, you know, why talk up the demand so much if you've already got the demand? Why leak that there is so much demand out there? You know, and at the same time, this is a fairly small part of the, small slither of the company that's being sold. So a lot of investors being forced, fund trackers and so on, or tracker funds and so on, that need to buy whatever is in the indexes. So I think it's a little bit more nuanced. But one thing is sure, this is a test case for overall whether there is strong demand for the AI chip narrative that we've seen developing, and that has been so important in driving markets upwards over the last few months.
Eddie, I wanted to get into that because there's a lot of nuance about chip companies, what exactly they make, what they supply, whether they're the things that make the chips that make the things. When we look at ARM, what specifically is it telling us about chip demand? Is it AI demand? Is it something else?
Right. They're not a classic. They're not, really a classic GPU maker. They're not somebody who competes at that level where they're making these chips that would be used to drive the AI revolution. They tend to be used much more in lower end products, much cheaper chips used by Qualcomm, used by companies that make mobile phones. That traditionally has been part of the primary part of their target. Now, however, they seem to be pivoting. We heard from the CEO that they're looking towards much more higher end, much more customized, much more, demand specific kind of chips. So they're trying to reposition themselves at the same time as launching an IPO. And I think that's a tricky, a trick to pull off. It's much easier to say, hey, this is what we're doing, this is working, and that's why you should be buying into this, than saying, hey, we're doing something else, we're going to do something different in the future. So there's a little bit of mixed messaging from this IPO.
Well, the good news is that big IPOs are back. I think we at least got to hang our hat on that. Eddie, thank you so much for joining. As always, Eddie Vanderwalt there. All right, coming up, North Korea's Kim Jong-un crosses into Russia for a rare summit with Vladimir Putin. We're going to be discussing that with the chairman of the Munich Security Conference next. And Gordon Shannon, 24 Asset Management Portfolio Manager, will be joining us later this hour. We're going to get into UK markets following that jobs data. Plus, we're also keeping an eye on Apple shares as we count down to the tech giant's high-stakes product event coming later today. For the first time, the new iPhone model you buy on the launch day could be made in India. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Sonali Bastick is in New York. Now, North Korean leader Kim Jong-un has arrived in Russia by train ahead of his meeting with Russian President Vladimir Putin. The U.S. says the talks will focus on supplying weapons to Moscow. Let's get more on this and how it fits into the wider geopolitical developments with Maria Tadeo, who's standing by with the chairman of the Munich Security Conference. Maria.
Yes, indeed. And that is, of course, Ambassador Christoph Heusgen, who joins us here in the studio. Thank you so much for being with us here on Bloomberg TV. I want to ask you, first of all, because we all know that, of course, you worked very closely for many years with Angela Merkel. You've done every possible meeting when it comes to international diplomacy. So you know exactly how a communique gets done. I want to get your reaction to the G20 communique. It seemed to me there was a lot of disappointment, particularly from the Ukrainian side. Is that fair?
Well, there was disappointment, of course. They would have liked to have the same language as last time around. But the question was, do we, in the end, have a statement or we don't have one? And I think there the opinion was, let's have a statement, let's have a strong statement, and on substance it is strong, but come out at this as united. And I think it would have been a bad message if the G20 had not agreed. So I think it's very good that the G20 stand together. Modi, of course, is a winner there, but also those who are not there are kind of the losers. Putin is a loser. She is also a loser because Modi was able to get this conclusion.
And when you say, because you've said a lot of interesting things in a minute there, but just to break it down, of course, you say it was important to get a communique, even if that meant maybe softer language. A lot of people interpreted the language as softer in Ukraine. Lavrov, the Russian foreign minister, he said it was a success for Russia, this meeting. Is that propaganda? Is that what you're saying?
No, but when Lavrov opened his mouth, he lies. So what do you expect? Would he say, no, we can? Of course he says the good thing. But when you look at the substance, it clearly says national sovereignty has to be guaranteed. So this is number one. Number two, it pointed to the resolution of the UN General Assembly. And this resolution was a resolution where 141 countries condemned the Russian invasion. Only 5 countries stood by with Russia. It was clearly repeated, just is not called. Of course, Ukraine would have loved it. I would have loved it. But it's very important that we have the G20 united behind the UN Charter. So that was good.
And you said to me, Modi was a winner. Xi Jinping was the loser because he didn't show up. Some say that is wishful thinking from the West. And that is a narrative that maybe we like in the West. But you seem to be convinced the winner there was Modi.
He was, of course, a winner. I mean, this was a Modi show. When you were in the town, they had these billboards, all around, and he has elections next year. But he has managed this meeting. He got a conclusion. Some didn't want it. Actually, when you heard briefings before, said no, there will not be a conclusion. They agreed to it, and she wasn't there. And you could see that now Modi can present himself because there are very important things also for the so-called global South in there that he is representing.
The leader of the global South?
There's no leader, because they are all. There's not one leader. They want to be the leader. The Indians want to be the Chinese, but it's clearly. There is not one leader, and this was demonstrated. So she seemed to be the leader after the BRICS because he was a big star. Now he was not there, and Modi is the one who got also topics on the agenda that are important to countries in Africa, Latin America, and Asia.
And you mentioned Latin America. I have to ask you about the Brazilian president, Mr. Lula, because it seemed he said Vladimir Putin will be invited to the Brazilian G20 that will take place next year. He also said, quote, if I'm president, he will not be arrested because of that ICC arrest warrant. Then yesterday scaled back. In your view, and I ask you because you've done G20 meetings countless times, will Vladimir Putin be in Brazil next year, hosted by Lula? He
will not be there because Brazil is a democracy and they have a judiciary. And Brazil has signed the international, the statute of the Rome Statute, the international criminal law, and it is clear. And already the Brazilian judiciary has said, no way. When he comes, he's going to be arrested because this is our Brazilian international obligation. Same thing in South Africa. Ramaphosa, the president, wanted to have Putin, but then the judiciary said, no way, we're going to arrest him. So this is a strong sign about international law.
So you say no Putin at the G20 in Brazil?
We can bet on this, yes.
You can bet on, so maybe Lula spoke too fast.
Yes, he spoke too fast. I think he's very emotional. You have to understand that Brazil, comes from a left tradition. They had suffered in Latin America a lot. I have to say that from American interventions, breach of international law by the US in Panama, in Grenada, in Salvador, Nicaragua, all this. And they call double standard. And they say, well, we have all these sanctions to do because of Russian invasion in Ukraine. But, what was about the US in Latin America? So this is something that one has to bear in mind. And we have to cater to this. And this is why it's so important, coming back to the conclusion that international law, UN Charter, this is a base for everybody.
And of course, that is maybe a change in sentiment between how the United States sees their relationship with Latin America, but also those feelings that are still present in some countries in Latin America. Of course, this is still a sentimental issue. I do have to ask you 2 questions that I'd be curious to see what you think. Obviously, we know today there is a meeting between Vladimir Putin and Kim Jong-un. Is that PR, the bad guys get together, or is there something strategic here that you should go, it is worrying?
It is worrying, but it also shows how desperate Putin is. He now goes to the outcast, the one that has huge sanctions by the United Nations. There are sanctions committee, so he's going there because he's desperate. He has lost his friends, so he turns to Iran, he turns to North Korea. So it's a sign of desperation.
So you don't see it as maybe there's something concerning when it comes to the weapons?
Of course,
is that a step too far?
It is concerning, of course. I mean, as I said, Kim Jong-un is an outcast. He's violating international law. You see what he does with his population. He's trying to build a bomb. So this is not good news, but it shows how far Vladimir Putin is ready to go to save his skin, to even go to somebody who is, as I said, an outcast, and look at what he does to his population.
And now as a final question, going back to your home country, Germany. Look, yesterday, the foreign minister of Ukraine, I was struck by some of the language when he was doing a press conference with the German foreign minister, Annalena Baerbock. And he said, look, there's a question of the Taurus systems. Obviously, Ukraine wants them. Germany could give them. It still, or seems that Germany is still debating. And he said, ultimately, there's always a pattern. Germany says no, then they will think and think and think, and then ultimately they say yes. My question to you very clearly is, should Germany provide the Taurus now?
Absolutely. I'm absolutely in favor of it. We
Why is
have
it
to
not,
do it.
then?
Well, I think it has to do a bit with the German psychology, our social democratic party that have been the party that always thought about somehow we can, by trading, by talking, we can get Russia to be a good partner. And their world has crushed. All of a sudden there is Russia, the aggressor. There's nothing you can excuse. But still there's some hesitation. Should we do this? So all the steps went according to the Kuleba formula. So asking, and it's, we should do better and go.
And will
go
happen
ahead
this
as
year?
Germany.
Just very briefly, you think it will happen this year?
Again, I'll bet that it will happen this year.
Well, Ambassador, thank you so much. Of course, that is Christoph Heusgen, German ambassador, and also the chair of the Munich Security Conference, which I know you're working on, and that's why you're here in Brussels. So thank you for joining us.
Thank you very much for having me at Bloomberg.
Agenda.
It's a pleasure.
Appreciate it.
Yes,
Thank you so much. And of course, that was Ambassador Christoph Heusgen joining us here on Bloomberg TV this morning.
Maria, thank you so much. A great and timely conversation. Maria Tadeo there. All right, let's get some of the other stories that we have our eye on this morning. Heyman Capital founder Kyle Bass says American banks will lose hundreds of billions of dollars amid changing workplace trends. Take a listen.
And I think the banks in the U.S. will lose $250 billion in office over time here. And there's about $2 trillion of equity in the banks. So it's like a 10% hit to U.S. banking equity. And is that evenly distributed? Probably not. If it were evenly distributed, it wouldn't be that big of a problem. But I really think the focus on losses in U.S. commercial real estate is going to be in the office sector.
Shannon, this isn't exactly a controversial call. Maybe the actual number on it is, but office commercial real estate is something we've been worried about for a while. Unless you have that really prime type of real estate that people actually want to come back in the office for, there is already pain and folks handed back the keys, and even in some circumstances.
And it's not just even in the United States. We know we've seen issues from Sweden to Canary Wharf on the same degree. And, on one hand, this is a hard hit to a lot of regional banks, could last a couple of years. But on the other hand, it's a gain for a lot of private equity firms as well. And speaking of the fund management industry, Danny, I want to bring you the latest in the hedge fund world and deals, because we have Sculptor Capital Management. The board is being sued for an alleged breach of fiduciary duty while trying to engineer a $639 million acquisition proposed by rival Rhythm Capital. Now, investor Gilles Beauchemin said in a lawsuit that Sculptor CEO Jimmy Levin and other directors shortchanged investors by using NDAs tied to the deal to prevent shareholders from considering a higher offer. Remember, investors including Boaz Weinstein, Bill Ackman, Mark Lazary, and Jeffrey Yass have been reported to have offered a higher bid for Sculptor.
And over here in Europe, Shanali, Norway's wealth fund has upped its stake in UBS to 5%. That's just below BlackRock's, which disclosed its stake just above 5% in a filing on Tuesday. Now, the fund's investment in the Swiss lender was just above 3.3% at the end of last year. Look, allocating more to UBS, I mean, the thing is a giant now, right? In Switzerland, it does make sense of the hold that this big bank has. If you want to bet on European banks, perhaps UBS is a good way to do that, Shanali.
Yeah, and it's not just the Swiss banking system you're investing in here. It's also a global banking system, given the exposure they have to Asia. Right, Danny?
Yeah, although if you listen to Jamie Dimon, the banking regulations are coming to get you. Okay, coming up, we're going to be speaking to Gordon Shannon, 24 Asset Management Portfolio Manager. That's next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition, and here is what you need to know. Bankers are preparing to stop taking orders early for ARM's IPO, which is already 10 times oversubscribed. Meanwhile, Apple, it gears up for a high-stakes iPhone launch. UK jobs data for August showed another record month for wage growth, putting more pressure on the Bank of England to raise rates again. And JP Morgan CEO Jamie Dimon hails U.S. consumer resilience, but he's taking aim at U.S. regulators, calling for more humility. I'm Shannon Bassick in New York with Danny Berger in London. Danny, bring us to European markets today.
Well, Shannon, we were all ready to declare the death of the dollar rally yesterday after what happened in the Asia session not only meant a weaker dollar against the yuan and the yen, but also against European currencies. We're seeing that, not all of it, but to a large extent, undo itself today. The euro weakening against the dollar by about 1/3%. We're unable to get back to that 109 handle that we had seen on the euro. We're still struggling. It's the growth story that's really concerning. We also get an ECB decision come Thursday. 10-year yields in Germany, the rally is starting to ease. We got ZEW survey released at the top of the hour. Current future expectations rather were better than expected, so that kind of crippled some of the rally. We're seeing the front end does look to be selling off yet again. And then finally, European stocks. Not too much going on here, Shannon. We are just ever so slightly lower. What about U.S.? How is that session looking?
We are also lower on the day here. When you look at S&P futures, down more than 0.2%. This has been a slow September. When you look at the trading activity, it has been pretty weak. And then you look at the 2-year yield, you see a lift up once again. It is roughly flat, but it is hanging out just below 5% at 4.99, Danny. That is a little higher than we were at levels at this time yesterday. Now, the Bloomberg U.S. dollar index, as you've been saying, taking a leg higher, about 0.1%. This is reversing some of yesterday's weakness that we saw in the dollar. Brent crude, I believe this is quite stunning, now above 91. It is up about 0.7%, but that move last week into the 90 territory was a big move, and now we are seeing it on the rise once again. I also want to bring you some movers, because ahead of the U.S. trading day, we are looking at Oracle, already down more than 9%. Falling after reporting slower growth in cloud sales. We're also watching UPS because the CEO says the company will pay out the biggest portion of its new 5-year labor pact over the next 12 months while trying to win back customers it lost during the contentious contract talks, making it a challenging upcoming year. That stock is now down more than 1%. And Tesla is down this morning after rallying more than 10% yesterday for its biggest gain since January on that Morgan Stanley whopping upgrade. You're watching now Tesla down about 0.6%.
All right. Yeah, that Tesla gain, I mean, that was crazy. It's worth what, like 1.5 Volkswagens? All right, let me bring things over here to the UK because we got some wage and jobs data today, a couple hours ago. So unemployment, it is looking softer. It did climb to 8.5%, which is a record right now for the UK, save for the pandemic. But that blue line there, that is weekly earnings. That is wages. It held at 7.8% year over year. That is, again, another month of a record. But let me show you what the front end of the gilt curve has done. We are rallying today. At one point, we were rallying by about 9 basis points. We've come back a bit. We're lower by about 5.5, but this is still a market that's only pricing in one more 25 basis point hike from the BOE. And again, it pulled back on that slightly after that wage data. Let's get into this. Joining us now is Gordon Shannon, portfolio manager at 24 Asset Management. Gordon, what do you make of a rally and still hot wage jobs data?
Yeah. So I think there was something for everybody in the data this morning. As you mentioned, the tick up in unemployment. And the fact, if we look at that on a 3-month rolling basis, there's definitely a trend there of more weakness in the labour market. But it's wages that the Bank of England really have to concern themselves with. Now, we can push aside the 8.5% total pay number because the ONS says there's a number of one-off public sector and NHS bonuses there. But that 7.8%, excluding bonuses, it's much higher than the Bank of England can tolerate. So I think the recent comments from Andrew Bailey He wanted to be able to give us a pause here, or more than a pause. He wanted to be finished. He can't be finished.
I heard those comments and I was like, not again. Not again, Andrew Bailey. You've done this before and it didn't live up to expectations.
The one thing I'll give them is their projections for unemployment in Q3 were 4.1%. So 4.3% were ahead of that particular projection. So not everything they say is wrong to the inflationary side. But yeah, I'd lean a lot more into it's Hugh Fell, their chief economist, talked about the fact that core services isn't showing any signs of slowing. So I think that's more important than this idea that some of the other committee members have said that there's still a lot of lagged impacts and we're already restrictive. Yeah, we are, but not restrictive enough. And Dr. Catherine Mann yesterday, she's got the right idea.
So someone pointed out to me, Gordon, that we're almost 1 year from the Liz Truss mini budget, which I don't know how that's possible. Time is honestly meaningless to me at this point. Obviously, there was so much volatility that became apparent in the gilt market. How do you think about UK assets 1 year on, your appetite, their attractiveness to you?
Yeah. So the big change we've had is a lot more fiscal discipline from the government. So that's a real plus. And I think I'd almost put that ahead of the rest of the globe in that way. Inflation is still an issue in the UK and more of an issue than Europe or the US. I'm kind of tend towards the bearishness. So I'm pessimistic globally, but I think there's a lot more pessimism built into the UK. So from that point of view, I think UK assets do have something to offer here.
I think that doubling down on the pressure on the gilt market is worth taking some time on. I mean, how much more pressure do you think gilts might feel ahead?
I'm tempted to say when you look at the 6-month chart, the trend's your friend. Asset managers are positioned here for long-end gilts to give you a protection and insurance if we enter a slowdown. And I think that they will, but it'll be a pretty brief period. So you're going to have to be actively managing your book for that insurance policy to pay off for you. On the longer term, I don't necessarily think that the yields we've got to at the moment are the highs. If we look beyond the QE period, they're not that abnormal.
When you think about wages, we started this conversation talking about the UK wages, but when you think about what's happening across the Eurozone, we are days away from that big ECB decision. What are you positioning for?
I think the market has underpriced the chances that we get a hike there. The last few days we've seen the market move to realise that it's a bit of a coin toss. There are two camps in the ECB, the hawks and the doves, and there are valid arguments for both of them. The hawks, who generally are in the core versus the doves in the periphery, are worried about a wage price spiral. Now, when you look at forward projections of what prices are going to do in the EU, particularly Germany, both camps will be well aware that they're going to come down. There are a number of base effects, a number of subsidies which were pulled away last year and thus caused prices to jump. We'll be 12 months on from that, so they will drop out. But nonetheless, retail expectations of inflation are beginning to tick up, and that will feed through into wage expectations. The professional expectations in terms of the five-year break-even on inflation, those have moved up. So there's plenty for the hawks to argue for that hike. I've been told if we don't get the hike, it will be an aggressively hawkish pause, whatever that means.
Gordon, quickly here, how do you feel about the CPI data coming out of the United States tomorrow and the potential to change expectations that the market currently holds?
I think we might get a slight tick up there. The oil price is pushed up. The US is wholly self-sufficient when it comes to gas, so the events in Australia won't matter there, but I do think we might see it tick up a little. Nonetheless, I don't think the Fed are going to do anything. I think the Fed are completely finished here. I think there are enough signs of slowdown in the US that their policy is restrictive enough.
Translate that to me and what you would do for the US curve right now. How are you positioning?
Again, it comes to this. Everybody seems to be positioning to make use of the long end as protection, and you can, but on a more short-term basis. I think there are a number of overlooked risks when it comes to the global economy, so it's important to have some kind of form of insurance, whether that's been in very high-quality credit or having some long-end bonds that you're willing to be tactical with.
Gordon Shannon of 24 Asset Management, we thank you for your time. Now coming up, Apple's hotly anticipated iPhone 15 is set to debut today. More on what to expect from Apple's product launch event next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London alongside Shonali Basak in New York. All right, Shonali, let's turn to tech. There's a lot going on today. One of them is that Apple is set to announce the latest iPhone 15 at its product launch event today. And for the first time, the new iPhone model you buy on the launch day could be made in India. Now, we're going to discuss this as well as the ARM IPO. We know that that's had a lot of attention, too. And at the same time, there's some Tesla news to get to. But of course, our next guests are going to be mad if I call Tesla a tech company. So let's not do that yet. Let's start with Apple. Joining us now is Alex Webb of Bloomberg News and Matt Bloxham of Bloomberg Intelligence. Thank you both so much for joining Shonali and me. OK, let's start with this story about the made in India iPhones. Matt, let me bring this to you. What is the significance to have a launch of a new model that might be built in India if you're going to be buying it?
Yes, it's not the first time they've built phones in India, but the first time on launch day it will be available if the news is correct. And so I think this is a significant direction of travel for Apple, that it's kind of diversifying its production away from the China dominance. Obviously, with everything going on with the tensions with China, I think that's very important to reassure investors that they have supply chain resilience. And I think we'll expect to see India become a larger part of the kind of production. So I think it's a significant kind of vote of confidence, if you like, of Apple in India's ability to produce phones to the quality it needs and that its customers expect.
The ability to produce, but also the ability to sell. Alex, when you look at the ability for them to bring in customers after such a long slump, what is this new set of releases going to mean for them to start to turn the trajectory around?
I think the really fascinating thing is going to be pricing, right? Because the least price sensitive are inevitably the people who are going to be buying the Pro lineup. What we're seeing, at least according to our colleague Mark Gurman's reporting, is they're going to be doing a few things around the edges with the Pros, a little bit more functionality, a titanium case shell, which should enable them to charge an even more premium price at the very high end. And as we've seen stagnating unit sales, it's the ability to squeeze more dollars out of the units that they do sell, which is really able to help support the top line.
Do we usually see Apple price shares move on iPhone launches? I'm just trying to think how we should be geared up here in terms of market positioning. I feel like it usually doesn't. I don't know. I could be wrong there, though.
Well, it's always, buy the rumor, sell the news is often the kind of adage with Apple. And unless there is some knockout surprise, that, in the past, that has tended to be the case. The thing that's still not quite interesting is seeing what exactly sends the price lower or sometimes higher. That, for instance, with the Vision Pro, when that came out, it was things like the pricing, knowing what the target market was going to be the enterprise. Those little moments sent the shares lower in that instance. It could be very different today if there is some pricing surprise that's very much to the upside.
Now, Matt, what do you make of this idea of the Qualcomm deal that they just signed as well? You were talking about Apple's ability to supply its own products here, but this is a sign that its own in-house chip designs are taking longer than expected.
Well, that's right. Yeah, I mean, obviously it's great news for Qualcomm. I guess it's another 3 years of revenue that maybe a lot of people weren't expecting they were going to get. And as you say, it suggests that Apple's own in-house development is taking longer. And I think, coming back to what Alex said about, it's really important if you're going to charge higher prices that you're wowing your customers with amazing new functionality and technology. And perhaps it suggests that, some of those kind of really breakthrough technologies are maybe a little bit further out than we thought. But obviously they do have a lot going on with their own silicon anyway. So, I think it's perhaps a little bit of a disappointment for Apple, but I don't think it's too much of a problem.
While we're talking about chips as well, we know that the high margin chips in the ARM arsenal, if you will, has been part of the pitch for the ARM IPO, which is, as we've been talking about, 10 times oversubscribed. How compelling is this pitch? And do you believe that the current valuation is more in line with the reality than what they were previously seeking?
Well, I mean, we'll have to see where the pricing does actually end up to kind of have a strong view about the valuation. But I guess what you can see, if it really is 10 to 15 times oversubscribed, then the management team has been a great job on the road, pitching people on the mid to long-term story, which is clearly about a much bigger market than just smartphones and into AI and Internet of Things. So they've done a great job, but that means they'll also have to live up to those expectations in the quarters ahead when they're releasing results as a public company.
Yeah, Alex, what do you make of that, of the pressure that they're going to face after an overhyped, let me not editorialize here, a hyped IPO?
I mean, the story they've been telling heading into this seems to have been quite effective and building up the momentum. The real challenge right now is to demonstrate if people are buying that message that they really are an AI stock. It is not immediately clear that that is the case. The reporting from Ian King, our colleague who covers chip makers from San Francisco, he had a look at the deck, essentially, that the CEO, Rene Haas, has been presenting to investors on his roadshow, and they very much made this point that they are trying to essentially integrate more into what their customers are doing. So more precise architectures is what they're hoping to provide. That, therefore, could be a higher margin business. Interestingly, though, that is not specific to AI, right? That is just broadly what they do in CPUs. The fascinating thing here is when we look to this valuation, and we'll have a very good sense of it this time tomorrow, clearly, kind of on a historical basis, they've been punting for a multiple that's comparable to NVIDIA. If you look forward, of course, NVIDIA, its earnings are going to double, its revenue is going to double this year. That is not the case with ARM, even if it does get back on a growth trajectory next year after. So how investors compute that, no pun intended, sorry, is what will decide not just the opening price tomorrow, but how it evolves over the subsequent 48 hours.
You can make that pun because I was going to go to the supercomputer to compute that. The Dojo supercomputer, which Adam Jones over at Morgan Stanley upgraded Tesla on. Massive rally yesterday. 10%. Can you just give me your take on that? When I first saw it, I was like, maybe Tesla will move on this. I mean, the move was massive.
Yeah, look, Adam Jonas is a historically big Tesla bull. He has made some punchy calls in the past, which on valuation, which have proved to be correct, but not necessarily for the reasons he stated, right? He was very bullish about the prospect of essentially Tesla having a fleet of self-driving taxis. We're yet to see that happen. The supercomputer is fascinating. One of my takeaways from it is people talk a lot about the data that Tesla is able to pull from all its vehicles, not least the camera data that it has from where people are driving, and it can use that to train its model. The fact that they need this supercomputer suggests they haven't been doing it as well maybe as they would have liked in the past, right? Now, if they have this, maybe it gives them a head start. It gets them, gives them some advancement in that space. Because at the moment, when it comes to self-driving cars, they are absolutely lagging. Google's Waymo and General Motors' Cruise unit, sort of the market leaders technologically. This might give them a leg up in that space.
Our thanks to Alex Webb and Matt Bloxham. Coming up next, we're going to look at some of the market-moving events to watch throughout the day. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Shannon Bassick in New York with Danny Berger in London. Now let's take a look at what's ahead today because we have NFIB small business optimism data out in the U.S. at 6 a.m. Eastern Time. Then we'll get OPEC's monthly oil market report coming out at 7, and a host of bank executives, including Goldman Sachs CEO David Solomon, speaking at a Barclays event in New York City throughout the day. And Apple's long-awaited launch event in Cupertino, California at 1 p.m. Eastern.
Shannon, we're also today looking out for potential deal news coming out of UK football. Bloomberg has learned that the UK's Everton Football Club is said to be close to an agreement to be acquired by a Miami-based private investment firm, 777 Partners. For more, Bloomberg UK business reporter David Hellier joins us now on this. David, you've had great coverage of this. First of all, wait, is it 777 or 777? I should probably get that right.
777.
777.
Yeah.
Okay, it's a mouthful. Why would Everton's current club owner, Farhad Moshiri, sell Everton?
Well, he's had a very wretched time since he went into Everton in 2016. He's, I mean, unlike, you know, some owners are accused of not spending on players, he's spent a fortune on players. And he's invested, you know, hundreds of millions in Everton. But really to no avail. The performance on the pitch has been dismal. Not you know, I mean, another businessman who's finding it very tough is, you know, Todd Bowley at Chelsea, who they've spent $1 billion on players and they're struggling. It's not that easy. And as a result, Everton fans have been, there's been a toxic atmosphere at Everton. Last year, the police basically instructed the board members not to come to the matches, to take up their seats at the stadium, because they couldn't be certain of their safety. So I think he's basically just had enough.
Yeah. I mean, taking a step back, you mentioned Todd Bowley. I mean, the Americans are coming for English football, not just for English football, but for football in general. I mean, 777 is a great example of this. I mean, why are they interested in Everton and more generally in buying up so many teams?
Well, I think, I mean, they're massively interested in European football. 10 out of the Premier League clubs, if Everton goes to 777, will be owned by Americans. You've got Roma, you've got AC Milan, Inter Milan, all with American ownership. I mean, they see it, I mean, basically, I think on one level, they see it really as a multiple of revenues. It's so hard to get an NFL franchise. And when you do get it, you have to pay, like the Washington Commanders did, you have to pay really, really big bucks. In Europe, the multiples are a lot lower, but there's a caveat to that, and that is that the risk is massively higher, as you can see from this Everton situation.
Yeah. I mean, you can't have an NFL team be demoted, but you can certainly have it here. Yeah. David, such a great story. Please keep bringing us them. That's David Hellier. Again, reporting that as soon as today, we might have an announcement of this deal. Again, remarkable, as he mentioned, that if this goes through, Shanali, 10 out of 20 Premier League teams will be owned by Americans. We're coming for football.
Better for the valuations, but unclear whether it's better for the teams.
A very good point. All right, that's it for Early Edition. Surveillance is up ahead. We're going to be hearing from NY Fed President Bill Dudley, among others. This is Bloomberg.